The key question is where the transaction banking industry sits, not only within the commercial environment, but also within the industry.
Transaction banking is now core business and will be even more relevant for the future.
Global transaction banking would be more and more important, and the balance would be shifting away from the equities and debt side to more on the commercial side of the house. So how we become more efficient, how we become more of a collaborative product setting as far as bundling it together and offer that value-added package to our clients is where I see the income coming from.
We're based in Asia, Africa, Middle East. I think we've been very lazy in those regions, frankly, as an industry about collecting fees. We've been competed them away quite happily, so that's something that we could all work together to improve. The other thing is just the way we're running our operations. There is a lot of opportunity for us all. We know we're in scale businesses. There's still too much paper around. We're finding massive opportunities to increase the use of electronic capabilities and get enormous efficiencies in. That goes straight to the bottom line as well.
We have to be honest with ourselves that the issue is growth. It's revenue growth. And the developing markets, although they're incredibly important, are not large enough to offset the lower growth in the more developed markets. So I think we're all up against just a constrained growth environment. Yeah. So you tend to look at your expense base much more closely in that kind of environment.
It's fair to say that from our perspective, growth in Eastern Europe is currently probably underestimated. We still have a lot of opportunities in the cross-border business where we were weaker within Europe.
We've just kind of stepped back and said, which are the push countries that we should have the right infrastructure in? And often you have to open a branch, you have to kind of go through kind of the regulatory review, et cetera. So we're in dialogue in various countries for where we believe the volume's going to be.
I think we're seeing some really big shifts. I mean, just think we're getting a new reserve currency being born at the moment. If the trade flows that you're having to China, your 30% of payments could be in RMB very soon.
So let's just move on to the regulatory world.
We're looking at this and saying, if the regulations are put in as they're written at the moment, we could be seeing 2% drop in global trade, 0.5% off global GDP. Those are big numbers.
I think that there is not really awareness of the negative impact on at least Europe, Western European countries, that this kind of ruling may have on our capability to export our products and by that way to support the growth of the regions.
It's all about fact-based arguments, and we're getting better, I think, in some of the conversations that we're having about quantifying, about putting frames on the impact on trade, the impact on liquidity. And so if you're a regulator, of course you want those facts, but then you also, I would assume, want to have it explained in a way that doesn't look like there's an agenda.
I think the key thing is this continual communication cycle, both from the groups together, as well as individual contact from individual entities to the individual regulatory people from all levels, because hopefully if they hear it from different directions on a continual basis, their eyes will open up a bit. I'm not optimistic.
The huge amount of the details are being left up to national regulators, and for those of us, and I think it's most of the audience, who work in more than one country, the more consistent they become, the better it will be for all of us.
You have other players, the non-bank players,
absolutely,
that are coming into the marketplace now who don't have as much regulatory issues as we have as banks. My opinion is that they will have to come up on the regulatory environment, because make it a more, I don't think it'll be level, but more within some type of distance playing field.
Are we being as efficient and effective in our adherence to compliance and KYC and sanctions requirements as we could be as an industry?
One of the things we're exploring as an industry is, are there commonalities that actually an organization like SWIFT could help us do some of the things that could be more common? We'll probably all still need to have our customized reporting or scanning or all the different ways that we look for questionable transactions, but are there things that could be done as a utility? And we're right in the middle of talking to SWIFT about that at the moment.
For us, it's always an issue in my mind, is that we all have great systems internally. We do a lot of work together. We do a lot of filtering on this process. But where we have a gap is, in my mind, is that we are not able to share.
Exactly.
And that, to me, is where I think the value would be really driven very high for us on expense saves, as well as loss saves, as well as just being able to have a list of these
Bad guys.
bad guys.
The bad guys. Yeah.
Yeah.
I think that the biggest opportunity is in innovation, because we're pretty separately good at these various core functions. And I think the challenge to the industry is how we're going to innovate. And of course, it has to be against client needs. So I think actually the client's going to really make out in this environment where we're going to try to get closer and closer to what their needs are and try to combine services in a different way.
Innovation, yes, for us also is very important. I think from our perspective, an area that we at least haven't exploited yet enough is the B2C world, even if then in this area we have to face newcomers.
The other thing we're noticing this week, we're not all pretending we can do everything. And I think there's some very sensible discussions going on as to how we can work together and share the globe between us, essentially.